So you might have seen those scary headlines like, oh, billions of dollars worth of Bitcoin or Ether options are about to expire, and that's gonna push the price down. But is this a legitimate concern though? Or is it just more FUD to make people sell their precious coins? In this video, we're gonna explore everything you gotta know about this topic and answer the million-dollar question, can we use this phenomenon to our advantage? So if you wanna become a savvier investor, then strap in my friend and let's dive right in. Now, options are pretty darn complicated. If I started just going into it right now, you probably think I'm speaking an alien language. But for this video, you don't really need to understand the nitty-gritty. Just know that options are financial instruments that people use. They are derivatives, which means that their value is related to the underlying assets like stocks or Bitcoin. It's kind of like going long or short because options contracts let you bet on upside or downside for any particular asset. But it's much less straightforward beyond that because options have an expiration date and a specific price level associated with each one. If you want to learn the nitty-gritty of Bitcoin options, you should watch my explainer video. I'll leave in a card up here and in the description below. For this video though, just know that people use options for three main reasons. 1, hedge existing positions. 2, generate income by selling options. And 3, speculate, or what I like to call gamble. After all, options are how those Wall Street bets degenerates turned a few $1,000s to a few $1 million. But what do options expiring have to do with the price of Bitcoin or Ether, right? This is where something that's called the maximum pain theory for options comes into play. Basically, it says that an asset like Bitcoin or a stock tends to get pushed to the price where the greatest number of its options expires worthless. Now, why might this happen though? Well, because for every options contract, you have a buyer and a seller. Generally, we retail guppies are the buyers, whereas the more sophisticated institutions or market movers are the ones who sell or write options. It's the same term, by the way. And it's option sellers, or those whales, who stand to benefit the most if the price reaches the max pain level. Because in that case, the buyers lose the money they paid for those options, and the sellers pocket that money and don't have to deliver any Bitcoin or stocks to the buyer. This is why they have such a strong incentive to manipulate the price. I mean, this all sounds reasonable, right? But how does this really play out in reality? Let's dig in a little bit further. But first, some important things you gotta know. The max pain price, where the most options expire worthless, is constantly changing. After all, traders are opening and closing different positions, and that all affects the max pain level. That's why this concept is most useful when there's a significant difference between Bitcoin's current price and its max pain level, and also when expiration is getting close for those options. You can calculate this max pain level manually if you get all the data from exchanges, but there's also an easier way. Here, let me show you real quick. All right, so we want to go to this site, coinoptionstrack.com. I'll leave you a link down below as well. And you can see the Bitcoin options markets, all the stats right here. But what we want to click on is open interest right here. And basically this shows you the number of options contracts currently out there, and you have both sides, right? Puts and calls. It's grouped by expiration dates. So right now it's showing December 31st, and it shows us the max pain price level currently. And remember, this changes, but we don't have to do the manual calculation. They tell us. If we go a little bit closer, September 24th is at 40,000 per the current options market. One thing you'll notice is that there's a lot of options for expirations, right? You got your dailies, weeklies, and so forth, but it's usually your end of month ones and end of quarter ones that have the most amount of demand. That's why it's those expirations that are also arriving soon and have a ton of open interest that potentially have the largest impact on the market price per this max pain theory. Think about the financial incentive, right? There's not a lot of time left, and also there's a ton of money at stake. So whales gotta get going and manipulate the price of Bitcoin to get to these levels ASAP when it's coming close. All right, now that we have a little better understanding of this concept, let's look at how some expirations played out in the past and see if there's any impact on price. By the way, options have not been around for that long for Bitcoin, and people were already talking about this max pain theory back in June of 2020 when the Bitcoin's options market was super fresh and new. If you look at this chart, the max pain price was $9,250 for the options set to expire that day. And if we pull up Bitcoin's chart, and look at the market price for that same day, boom, super close to it. People saw this effect appear on the price charts, and the theory that I heard is that the market price of Bitcoin moves towards the max pain level as we get closer to the expiration date. And then shortly after expiration, the price of Bitcoin will snap back in the direction of its overarching trend. If that sounds a little bit confusing, here's an analogy for you. The max pain price is like a magnet that gets stronger and stronger as its expiration date nears, pulling the price of Bitcoin towards it. And then the magnet shuts off immediately after expiration. At that point, Bitcoin is free to move on its own again. But come on, we need more than just one example, right? Well, here are some other expirations from this year. For March 26th batch, the max pain level was $44,000. And in the week leading up to it, Bitcoin dropped from around $60,000 to $50,000 and didn't quite reach the max pain level. It was kind of far actually, but also within minutes after the contracts expired, the price pumped 1.2%, which kind of backs the working theory I mentioned earlier of how these options affect the market price. For the April 30th batch of options, the max pain level was $54,000. And lo and behold, on the exact time of expiry, Bitcoin's market price was $54,500. Crazy, right? It was pretty much right on the dot. But hold your horses because the May 28th options will throw you in for a loop. Remember how I said that the max pain levels are always changing as people add or close more positions? Well, in late April, the max pain price for these May options were $60,000. Fast forward a few weeks, in the middle of May, that level became $56,000, and then leading up to expiration in late May, that level ended up at $50,000. But also the market price of Bitcoin at the time of expiration was at $37,000, which was not even close to the max pain level. So perhaps this theory is not as reliable as we initially thought? Well, reliable or not, options and other derivatives like futures are often the basis of conspiracy theories for Bitcoin and other commodities like gold, silver, or oil. This is super fascinating actually, because we see a lot of people saying, oh, gold's price is suppressed because people trade derivatives instead of buying gold itself. They claim that something similar is happening to Bitcoin as more exchanges offer derivatives. Personally, I've read some research about this and I side with the folks who reject this narrative. And so my point here is that you should do your own research about this, because we're gonna hear this accusation a whole lot more in the future. People blaming yucky price action on the existence of derivatives. Okay, so time for $1 million question, right? Can we use our knowledge of options expiring to our advantage? I'd have to say no, actually, at least not right now. I mean, Bitcoin options haven't been around for that long, so we don't have that much data. And it's difficult to prove if it's just coincidence or legitimate cause and effect. I mean, futures contracts also expire around the same time, so who knows if it's because of futures or options that's actually moving the price. This theory of maximum pain is just not a reliable trading indicator to use for consistent profits. You'll have to use this concept as just one data point along with other tools in your toolbox. But hold up, there's a twist here, because Bitcoin's options markets are super tiny right now. Like in April, the total amount of open Bitcoin options was sitting at $13 billion, only around 1% of Bitcoin's entire market cap at that point. For perspective, Bitcoin's daily trading volume is around $30 to $50 billion. However, the market for these options are growing every day. So while expirations may not matter right now, eventually it may grow large enough to impact the price of Bitcoin. After all, just look at this chart. During the raging bull market earlier this year, we saw some large pullbacks near the end of each month. That could have been caused by derivatives like options or futures expiring, but who knows? It's hard to tell right now, but it could be a sign of things to come. That's why we gotta keep our eyes on this, because I may have to change my conclusion in the future. Another huge myth that I called out in a previous video is the death cross. That topic is still super relevant because it's guaranteed that more of those will appear in the future. So be sure to watch this video if you haven't researched death crosses yet, and this one explaining the nitty-gritty of Bitcoin options. I'm Kevin from BFB. I can't wait to see you on the next one, and cheers.